Hello and welcome to FX Acrobatics. I am the Acrobat and today we'll be looking at breakup structure and market structure shift. This is part 5 of 10 of the market structure series that we've been doing. And this is a very important concept. Alright, without any further waste of time, let's get down to business. Alright, this is the euro dollar or the euro, whatever I like to call it. This is the daily chart, and let's have a look at what breakup structure is first, and then we will differentiate very soon with market structure shift. So you can go to TradingView and look at the date range here, somewhere from October 2021 all the way to somewhere from October 2020 all the way to June 2021. All right, this is a swing high right here. So the market goes, and when this green candle, this bullish candle closes, it has to close above the swing high. It's the first candle that closes above the swing high. That's a breakup structure. Okay, we confirm a breakup structure. So we will remain bullish as long price is closing above swing highs like that, breaking structure on the swing highs. It's another example. So swing high, this green candle here again closes above that swing high for the first time. That is a breakup structure. So we remain bullish. This is another one. This swing high, this candle here closes above that swing high for the first time. We remain bullish. That's a breakup structure. Now note that there hasn't been a case where price has closed below a swing low. That's why we remain bullish this whole time. You can check and verify. Here's another example. This is a swing high. Price comes close above that swing high for the first time. That's a breakup structure. And then this is where things get interesting. This candle, this red candle is low. The low comes in at 1.22093, and this candle here, which is the first candle that closes below the swing low. Look at this one. This one did not close below. There's a wick, so we ignore the wick. We are only interested at the close. So it did not close below the swing low. However, this one, the close comes in at 1.21511, which is now below, you see, 1.22, 1.21. This close is below the swing low here. And this candle also happens to be the last down close candle prior to the swing high at this swing low. That is market structure shift. We are now bearish from this point going on. This is what we call a breaker. So this is a bearish breaker, and here you get your low risk sell. Here, see this candle closes here. You can, when price comes back here, you can get in and take a short right there and go. You get another chance to do it here as long as your stop loss, well, we'll talk about stop losses at a later time, how you place them. But this is market structure shift. So that's the difference between the breakup structure and market structure shift. The market structure shift is a breakup structure because this candle is the first one that closed below the swing low. However, when this candle does that and creates a breaker at the same time, that becomes market structure shift. Here are other examples here. Breakup structure, again breakup structure. So you remain bearish this whole time because no other candle has closed above a swing high for the first time. You can check and verify that all the way here. There's an interesting case here where one might actually think that this case here looks extreme, right? Potentially you'd have to find some kind of a breaker somewhere here. There is no breakup structure or market structure shift during this, whatever this is here. You have to take a closer look to really get down to the bottom of it. You see the high goes all the way there. So this candle just wicked above it and closed below. In any other swing high, this swing high, nothing closed above it. Another swing high was created instead, but no close above it. This one, you might think that maybe this, because it's above this one, it doesn't count because we have that wick there, and this counts as a swing high. So this candle closed here below this swing high again, so no decisive close above any swing high has been observed here, so we remain bearish. Breakup structure when this candle closes, again here when this one closes. Yeah, other examples. Breakup structure, breakup structure. The first market structure shift occurs here. See that? See this candle here? This is a swing low, and price goes all the way up. Observe here, there is no swing low here. Even though we have this bullish candle here, it does not go above the previous one, and it's lower than this one, and this one is lower. So there's no swing high anywhere here. The real swing high is here, and this is a swing low, and the first candle to close above that swing high is here, this one, and we get our market structure shift right there, and this is a low risk buy. So you can place your buy right there, and as you can see, so that's the interesting difference between the breakup structure and the market structure shift. So as long as the market is breaking structure, you remain on that side of the market until a market structure shift occurs, which is identified by a breaker. So the breaker that I did not talk about is here. It's a little bit complicated if you are not familiar with how to really define a breaker. So this candle right there is the breaker. So when do you become bullish here? Well, we have to check. This is the highest swing. This is the lowest swing low. This is the swing high before that swing low. So we want to see the first candle to close below this swing low. Nothing closes below it until this candle here, this green candle is the first one to close below that swing low, that swing high. So right there, that candle becomes a breaker, and when this green candle taps into it, just touches it a little bit, that's your low risk buy. So you can see that the direction of the market from this point onwards is bullish, and you get your breakup structures to the upside. And then the direction of the market when this breaker forms is bearish all the way until you meet this market structure shift. So if you define your trend or your buyers using breakers, you will never be confused. As long as a breaker is not formed, you remain on that side of the market. let me bring in some super trend to just show what I mean here. The super trend is a pretty good indicator for a bias, directional bias. If you are a follower of VP on No Nonsense Forex, check out the YouTube channel. I'll also link it below in the description. He talks about something called the baseline indicator. I find that you can actually use the super trend as a baseline indicator. It's pretty good. It weeds out the noise, if I may, because look here, it tried to tell you that the uptrend has begun even before the breaker confirms it here. So I'm not a fan, of course, of such indicators, but I really believe in the super trend. It's a pretty good indicator, but I believe that market structure is the fastest way, because the market could have turned against you at any point here. The uptrend had not been confirmed. There's no way of confirming it using this indicator. So market structure is king always. But if you are somebody who uses indicators, just like the no-nonsense Forex way of trading is based on indicators, I believe this one is the one that closely mimics price action. All right, so there we go. So you see super trend is saying bullish, and you get your bullish confirmation with the breaker here. So that's pretty good. At this point though, market structure was faster as always, because it's very precise. This may have been a fluke right here, but this, when you get this breaker confirmed down here, you get your market structure shift, you're already bearish, you can already take your low risk sell here. That is really good. But the super trend gets you here very late, a little bit late, so you miss this entry. Maybe you get another chance here, but I don't know if you take it, seeing that it breaks the super trend, and the super trend usually tends when price closes above. So you might be really scared to go short here, when you know that if this thing closes above the super trend, then it will turn green and signal a bullish move. Yet here there was no market structure shift on the on market structure, on price action. There has been no market structure shift observed, so you remain bearish, and you know that this is just returning into the break, and you can short the market right there. All right, so on this side, where do we confirm the breaker? Right here. So market structure and the super trend confirm a bullish turn on the market at the same time. So that's interesting to see. Okay, so as I said, it's not that bad with the super trend. Let's look at other indicators like the Hull moving average. It's just messy. At this point here, it's telling you that it might be bullish, but here you are not quite sure already. It's already telling you turned bearish here, and yeah, it's not good. But it also is fast. It's just that it's too fast for my liking, too fast. So we'd want to use it to look at short-term trends maybe, but use the super trend as your baseline if you are trading a no-nonsense way of trading. All right, so there we go with the hard moving average, and even here it's already telling you it's bullish. Yet super trend was quite impressive here because it held its own So this is already saying you're bullish, and it can get you on the wrong side of the market. How about the 50 EMA? Let's look at the 50 EMA. All right, it's saying bullish also here, signaling bullish all the way here. It's still bullish even though the market structure shift had long occurred. It's still bullish. It's bullish, and then turns bearish and bullish again. And then you might think that, okay, this is sort of like a consolidation maybe, yet this is still telling you that this is a bearish trend here. No market structure shift observed, so you remain bearish. See, that's why the price action is better, especially if you're looking at it from the institutional market structure point of view. All right, so it's very important to trade from breaker to breaker. Breaker here, you know you're up. Breaker here, we're going down. Breaker here, we're going up until you meet the next breaker, which I don't know. When I look at this, I can already see a high here. There's a swing low right here, and the first candle that closes below is here, and you can already see this last green candle returning into that. So you can go and check if what I'm talking about then took place, because it does look like a breaker formed down here. So if you combine all of these things that I've already talked about, now you can see how powerful institutional market structure can be. And it is the way, it is the only way. This is the way.